Hello students, in present video I am going to explain about 14th problem from retirement of a partner topic. I am taking this question from Telangana State Telugu Academy Inter Secondary Accountancy Textbook. But this video is useful to all commerce students who want to know about retirement of a partner topic. Previous videos links are available in the description box. Let us see the question first. Star, Sun and Moon are partners sharing profits and losses in the ratio of 5:3:2 respectively. Their balance sheet as on 31st March 2020 was as under. This is called old balance sheet. Below to that, Moon retired from the business on the above date with the following terms. So by seeing this retired word, we can understand that this is retirement problem. Here, Moon is known as retiring partner. Star and Sun are known as existing partners or continuing partners. Adjustment number A. Goodwill of the firm is valued at 20,000 rupees and it is decided not to raise goodwill account in the books. B. Buildings valued at 42,000 rupees. C. Provide for bad debts at the rate of 5% on debtors. D. Trade creditors 1,000 need not to be paid. E. Star and Sun share future profits equally. F. Amount due to Moon will be transferred to his loan account with 12% interest per annum. What is asking? Prepare necessary ledger accounts and balance sheet of new firm. This is the question. Let us see the solution for this. In ledger, first account name is revaluation account. This account is a nominal account. Nominal account rule: debit all expenses and losses, credit all incomes and gains. When loss comes in revaluation of assets and liabilities, if asset value decreases or liability value increases, that is a loss. When profit comes, if asset value increases, liability value decreases. Adjustment numbers B, C and D are related to revaluation account. See the first one, B. Buildings are revalued at 42,000 rupees. In old balance sheet, building value is given as 35,000 rupees. Building is an asset. In old balance sheet, this asset value is 35,000. In adjustments, he is giving that building value is 42,000. So adjustment amount is new amount. Old balance sheet value is old value. So comparing to old value, new value is more. Means in revaluation of assets, building value is increased by 7,000 rupees. Asset value increased. Profit credit side by building account. Show how that 7,000 is coming. Market value, new value 42,000 minus cost price 35,000 rupees. Old value. Adjustment number C. Provide for bad debts at the rate of 5% on debtors. In old balance sheet, debtor value is given as 40,000 rupees. Debtors is an asset. 40,000 is the value. And firm has doubt on these debtors. So 5% of this amount may come, may not come. So firm wants to provide a provision on this debtors for 5%. So money may not come. Means loss, no, expected loss. Losses we have to debit. And provision for bad debt we have to subtract from debtors. Debtor is an asset. Asset value is reducing. Means debit side. Don't write debtor word. Write down provision for bad debt account. Show the calculation. Debtors value 40,000. On that 5% provision we are providing. 2,000 rupees. Adjustment number D. Trade creditors 1,000 rupees need not be paid. In old balance sheet liability side, trade creditor value is given as 25,000 rupees. In old balance sheet, trade creditors value is given as 25,000 rupees. And in adjustments is giving that 1,000 rupees we need not to pay. So our assumption is this is discount. Creditors allow discount to us. To the firm this is gain. Because creditor is a liability. So old value is 25,000. In that 1,000 we need not to pay. So new value is 24,000. Liability is decreased. That is profit, no? Credit side. By trade creditors account. No need of calculations. Directly 1,000 is given, no? Write down that in outer column. So everything is completed. Finally, we have to find out the balance of this account. credit side total is more. 8,000 rupees minus debit total 2,000. Difference 6,000. What is the meaning of this answer? Credit side we wrote gains, profits. Debit side we wrote losses. So finally, credit amount is more. Means this amount indicates profit. No? In revaluation of assets and liability, there is a profit of 6,000. This 6,000 belongs to all the three partners. We have to distribute to them. Where the total is less, that side we have to show this distribution. Debit side total is less. So debit side to star capital account. 6,000 rupees into, in which ratio? Then old ratio is given in the question. 5:3:2. So 5 number belongs to first person, star. So 5 divided by, add the 3 numbers, 10. 3,000 rupees. Next, Sun capital account. In 6,000, Sun takes 3 by 10. 1,800. Next, Moon capital account. In 6,000, Moon's share 2 by 10. 1,200 rupees. Two sides put the totals. Highest total 8,000 rupees. Credit side also same. So this is revaluation account. First account is completed. Next we have to prepare capital accounts of all the three partners. Capital accounts of star, sun, moon. Debit side, credit side. Capital account is a personal account. Personal account rule you have to follow while preparing this account. Personal account rule is debit the receiver, credit the giver. So from the firm, if partner is receiving anything, debit side we have to show. In other words, suppose partner is retired. So whatever he received, now he has to return to the firm now. So remember, at the time of retirement, the amounts which a partner should pay to the firm, debit side we have to show. Similarly, credit the giver. Means credit side, partner has given to the firm. All those amounts we should write. In other words, suppose partner is retiring. All these amounts firm should return to them. No? So remember, at the time of retirement, the amounts which a firm should pay to the partner, we have to show on credit side. So by keeping these rules in mind, let us start capital accounts. So capital accounts, we have to start with opening balance. Which side? Credit side. Because capital is a liability. Liability shows a credit balance. Therefore, credit side we have to show these amounts. And what to write in particular column? By balance brought down. From where we should take these amounts? In old balance sheet liability side, capitals of three partners are given now. Star 50,000, Sun 40,000, Moon 30,000. These three amounts you have to write here. 50,000, 40,000 and 30,000. Other explanation also I can give. Why credit side we are writing. Partners brought these amounts into the business. If they retire, firm should pay these amounts to them. So at the time of retirement, the amounts which a firm should pay to partner appear on credit side only. That is why opening balance credit side we wrote. Next come to revaluation account profit. In revaluation account, debit side we got answers. Means this is revaluation profit. So we follow double entry system now. According to that, in one account if you debit anything, in other account credit side you have to post them. So in revaluation account debit side we wrote these three amounts. We wrote star capital account, sun capital account, moon capital account. So capitals we wrote. Therefore in capital accounts also same entry we should post. Which side? Credit side. By what to write in particular column? I am taking these three amounts from revaluation account now. Write down that. By revaluation account. Amounts 3,000, 1,800, 1,200. We can frame the journal entry also. Entry for revaluation profit is revaluation account debt are to star capital, to sun capital, to moon capital. Next come to accumulated profit, general reserve. In old balance sheet liability side, there is one accumulated profit, general reserve, amount 20,000 rupees. General reserve amount is 20,000 rupees. To 3 partners we have to distribute now. Star's share is 20,000 into old ratio 5:3:2 given in the question, 5/10. 10,000 rupees. Son's share is 20,000 into 3/10. 6,000. Moon's share 20,000 into 2/10. 4,000 rupees. So general reserve, we said we should write general reserve means accumulated profit, partner savings. If any partner retires, then firm should pay these amounts to them. Means credit side we should write. So credit side by general reserve account 10,000, 6,000 and 4,000. Now come to an important adjustment, goodwill adjustment. Let us see what is giving in the question regarding goodwill. Adjustment number A is related to goodwill. Goodwill of the firm is valued at 20,000 rupees and it is decided not to raise goodwill account in the books. CE adjustment. This is also related to goodwill only. Star and Son share future profits equally. This is called new profit and loss ratio. In case of retirement, what is goodwill concept? 3 partners, Star, Sun and Moon, started business. Who is retiring? Moon is retiring. Then after his retirement, whatever profit comes, that profit will be taken by Star and Sun. Before retirement, 3 members used to share the profits. After retirement, only these 2 members. But this profit is coming because of the efforts of 3 partners. So after Moon's retirement, his efforts are also enjoyed by existing partners. So this is an injustice to retiring partner. Therefore, retiring partner demands some compensation from existing partners. That compensation is known as goodwill. So who should pay goodwill to whom? Existing partners should pay goodwill to retiring partner. Goodwill amount is 20,000 now. So they don't pay 20,000 rupees to retiring partner. 20,000 is total firm's goodwill. In that, retiring partner's share only he gets. So 20,000 is a total goodwill. Their old ratio is 5:3:2. Moon is retiring. Moon's share 2/10. 4,000 rupees. So in total goodwill, retiring partner's share is 4,000. That 4,000 he gets from existing partners. In which ratio? Why they are paying goodwill to him? Because they are gaining. As they are gaining retiring partner's profit, in gaining ratio only they have to pay this compensation. Means we need gaining ratio. So let us calculate gaining ratio. Calculation of gaining ratio. Old profit and loss ratio of Star, Sun and Moon is given in the question, 5:3:2. So Star share is 5 divided by, add these 3 numbers, 10, 5/10. Sun 3/10. Moon 2/10. New ratio is also given in the question. New profit and loss ratio of Star and Sun is equal to, equally they are sharing, means 1:1 because 2 members are there. To calculate gaining ratio, there is a formula. New profit and loss ratio minus old profit and loss ratio. So, Star gained. Star, first person, his new share is 1/2 minus old share is 5/10. For 2 and 10, we have to find out the LCM. 2 ones are 2 5s are. So 2 into 1 into 5 is equal to 10. LCM is 10. 2 5s are 10. 5 into 1, 5. Minus 10 ones are 10. 1 into 5, 5 is equal to 0/10. For Sun, Sun new share is 1/2. Sun old share is 3/10. For 2 and 10, LCM is 10, no? 2 5s are 10. 5 into 1, 5. Minus 10 1s are 10. 1 into 3, 3. Is equal to 2 by 10. Nothing but 1 by 5. So forget denominators, take only numerators. Then gaining ratio of star and sun is equal star 0 is to sun 1. What is the meaning of 0 is to 1? Star is not gaining anything. Total share of moon is gained by sun only. Gaining ratio of star and sun is equal to 0 is to 1. Means what? Star is not gaining anything. Total share of moon is gained by sun only. When sun only is taking his profit, he should only pay the goodwill. Therefore, this 4,000 rupees, who should pay to retiring partner? Only sun has to pay. Star need not to pay any goodwill to moon because he is not gaining anything. And to adjust goodwill in case of retirement, there are 3 methods: revaluation method, memorandum revaluation method, and direct adjustment. In revaluation method, what happens? Partners create goodwill in the firm and that goodwill will be retained in the business. In memorandum revaluation, partners create goodwill and they close that goodwill. Goodwill account should be closed. Goodwill should be cancelled. Goodwill should be written off. If these sentences are given, then memorandum revaluation account we should apply. But in present problem is not giving this type of sentences. When we should apply direct adjustment method? Retiring partners the share of goodwill. If we adjust without opening goodwill account, means through capital accounts, if we adjust goodwill, then we should use direct adjustment method. In present problem, that sentence only is giving now. Goodwill of the firm is valued at 20,000 and it is decided not to raise goodwill account in the books. So we should not create goodwill in the books. Without creating goodwill, goodwill should be adjusted. Means goodwill should be adjusted through the capital accounts of retiring partners. And capital account shows a credit balance because capital is a liability. Liability shows a credit balance. If you want to increase capital while writing the journal entry, you should credit capital account. If you want to decrease capital while writing the journal entry, you have to debit capital account. Who should pay goodwill to whom? Sun should pay goodwill to moon. Means sun's capital we should decrease, moon's capital we should increase. Therefore, journal entry is sun capital account debtor. How much you have to decrease? Sun has to pay 4,000 goodwill to moon. Means sun capital we have to decrease with 4,000. Debit 4,000 rupees. Moon capital we have to increase, Therefore, credit moon capital account with 4,000 rupees. How this 4,000 came? Show the calculation here. Total goodwill amount is 20,000. In that, moon's share is 2 by 10 is equal to 4,000. So this is a journal entry for adjusting goodwill in case of third method, direct adjustment method. If you observe this entry, we have not created goodwill. Goodwill account is not debited, not credited. That only is giving. Without opening goodwill account, goodwill should be adjusted. So through the capital accounts, we adjusted goodwill in this manner. Now this entry we have to post in capital accounts. Sun capital is debited. So in Sun's capital, first we have to post this entry. We said Sun capital is debited, therefore debit side you have to post. What to write in particulars column? Other account name, moon capital account. Amount in Sun column, 4,000 rupees. Similarly, in moon's capital account also we have to post. Moon capital is credited, so credit side we should post. By what to write? Debit account name, Sun capital account. Amount in moon column. So all amounts we are written in capital accounts. Finally, we have to find out the balances. First, retiring partner. Credit column total is 39,200. So this amount firm should pay to partner. So in this, his capital amount 30,000. In revaluation of assets and liabilities, his share 1,200. In general ledger, his share 4,000. His share of goodwill 4,000. All these amounts firm should pay to partner. And how firm is paying these amounts? Let us see what he is giving in the question. Adjustment number F. Amount due to Moon will be transferred to his loan account with 12% interest per annum. So it is clear that firm is not going to pay this amount immediately. Firm wants to transfer this amount to Moon's loan account. Therefore, debit side, you have to write to Moon loan account. Amount 39,200 in Moon's column. Put the totals. In question he is giving some percentage, interest percentage 12. So there is a 12% interest calculation, so we need not to show anywhere. Because when firm is paying his amount, at that time this interest will be calculated. So at present only loan account is created. Firm is not paying any amount to Moon now, therefore no need to calculate interest. Come to existing partners capital accounts. Credit total is more than debit total. Star 63,000 rupees. Sun 47,800. Then debit side, for these two amounts write down balance carried down. Star 63,000. In debit column nothing is there. So balance becomes same amount 63,000 rupees. Sun credit total 47,800 minus debit amount 4,000 is equal to 43,800. Total 47,800. With this, capital accounts are completed. Next, loan account. Next account is Moon loan account. Because we are transferring Moon's due amount to his loan account now. In capital account, debit side we wrote to Moon loan account 39,200. So as per double entry system, same posting in Moon loan account, credit side we have to show. So credit side by. From where we are taking this amount? From Moon capital account. So write down that. By Moon capital account. Amount 39,200. Based on this posting, we can frame the journal entry also. Moon loan account we wrote on debit side of Moon capital. So journal entry is Moon capital account debtor to Moon loan account. Then only in Moon capital account debit side it will be posted. In Moon loan account credit side it will be posted. So there is no other entry. Therefore, close this account. Debit side 39,200. For this, write down to balance carried down. Two sides, put the totals. With this, ledger is completed. In ledger, we prepared revaluation account, capital accounts, Moon loan account. Goodwill account is not necessary because this is direct adjustment method. Without opening goodwill only, goodwill should be adjusted. And a bank account is not necessary. In balance sheet asset side, in old balance sheet asset side, he has given cash at bank. But no need to prepare bank account because no partner is bringing money and to any partner, firm is not paying any amount. So cash is not coming, cash is not going. Therefore, no need to prepare bank account. Directly new balance sheet. New balance sheet heading is balance sheet of Star and Sun as on 31st March 2020. So we have not written Moon's name because Moon is retired. So in old balance sheet, Star, Sun, Moon, three members particulars are given. In new balance sheet, only Star and Sun particulars we are going to write. That is the difference between old and new balance sheets. Let us start with asset side. Based on the old balance sheet and adjustments, we have to prepare new balance sheet. First, asset side. Cash at bank 26,000 rupees given now. Cash at bank 26,000 rupees. We have not prepared bank account in this problem. So no cash is coming, no cash is going. Therefore, in new balance sheet also same value we should show. cash at bank 26,000 rupees.
Next, bills receivable 14,000 rupees. There is no adjustment related to bills receivable. So in new balance sheet also same amount we should write.
Bills receivable 14,000 rupees.
Next, debtors 40,000 rupees. Adjustment number C. Provide for bad debts at the rate of 5% on debtors.
Debtors old value is 40,000 rupees. PBD we calculated in revaluation account 2,000 rupees came. So this 2,000 may come, may not come. Chances are 50-50. Means expected loss. We have to subtract from debtors. Debtors in inner column 40,000 rupees minus provision for bad debts 2,000 rupees. 38,000 in outer column.
Next, stock 30,000 rupees. And there is no adjustment for stock. So in new balance sheet, stock value same amount you should write 30,000 rupees.
Stock 30,000 rupees.
Next, furniture 25,000 rupees. No adjustment for furniture. So in new balance sheet, furniture value same 25,000 rupees.
Furniture 25,000 rupees.
Next, buildings 35,000 rupees. Adjustment number B. Buildings revalued at 42,000 rupees.
Buildings old value is 35,000. New value 42,000. This is new balance sheet, no? New values only we should write. So buildings in inner column old value 35,000. 7,000 is increase, no? Appreciation we should add. This 7,000 we calculated in revaluation account. 42,000 minus 35,000. That 7,000 we should write here. Total in outer column.
Asset side completed. Come to liability side. General reserve. Don't show this amount here because general reserve we transfer to all partners capital accounts now. Now there is no general reserve. Next, trade creditors 25,000. Adjustment number D. Trade creditors 1,000 need not be paid.
Trade creditors 25,000. Firm has to pay 25,000 rupees to creditors. In this 1,000 we need not to pay. So that 1,000 is discount. Discount we have to subtract. Show under liability side. Trade creditors in inner column 25,000 rupees minus discount 1,000 rupees. Net amount in outer column 24,000 rupees.
Next, outstanding expenses 5,000. There is no adjustment for this. So in new balance sheet also same amount we should write.
Outstanding expenses 5,000 rupees. Finally, show loan account of retiring partner and capital balances of existing partners. First loan. Which amount we should write here? In Moon loan account we got answer, no? Balance carried down 39,200. This amount we have to show here. Moon's loan 39,200 rupees. Next, existing partners capital accounts. Star Capital, Sun Capital. Which amounts we have to show here? In capital accounts debit side we got answers, no? Balance carried down 63,000, 43,800. These two amounts we have to show here. Star Capital 63,000, Sun Capital 43,800. So everything we have taken in balance sheet. Finally find out the totals of two sides. First a liability side total 1,75,000. Asset side. Thus two sides you should get same total. Then only a problem is correct. So this is all about 14th problem from retirement of a partner topic. Hope this video is helpful to you. Thank you.